We've seen a spike in wholesale interest rates over the last week, with wholesale interest rates up about 0.25%. Wholesale interest rates are the rates that banks borrow at, and so they have implications for mortgage rates. We've got a decreasing OCR. It obviously dropped last week from 3.5 to 3.25. At the same time, we've seen some of these wholesale rates starting to increase. So what's going on? Our Reserve Bank's dropping the OCR because of weak economic conditions here in New Zealand. We expect rates to fall further. The Reserve Bank said last week in its interest rate forecast that it's expecting the OCR to bottom out at 3%. It's at 3.25 now, so the Reserve Bank's basically saying, hey guys, this is the bottom. We think it will go a bit further, maybe 2.75 or even as low as 2.5%. Based on weak economic activity locally. However, overseas, what we're seeing is a weak US economy, or getting weaker. It's been very strong, but getting weaker, and higher inflation outlook. The nasty word that goes with that is stagflation. No one will be wanting that. But what I see in the US is interest rates staying higher for longer, and that's going to hold longer term interest rates in New Zealand a little bit higher. So broad prognosis, not expecting to see too much movement in mortgage rates anytime soon. Short-term rates should continue to drop a little bit further. Those long-term rates have largely done their dash and don't really expect to see them move much further. The risk at the moment is that we could see potentially a small increase in some of these fixed rates, although I doubt it. I think the banks will stay competitive and keep rates where they are. If I was fixing at the moment, I'd contemplate fixing part of my loan shorter term, take advantage of the low rates and the fact that rates may go a little bit lower, and fix part of it a bit longer term, but not too longer term, 2 or 3 year fixed if you can get a rate below 5%.